Hi everybody, my name is Brad Latchett and I am the Director of Government and Industry Affairs for the Professional Insurance Agents of New York. And I'm here to talk to you today about one of the association's legislative priorities, which is reining in predatory lawsuit lending. This involves an industry called third-party litigation financing, which I'll get into in a second. PINY supports legislation that would bring fairness and transparency to this industry. So what is lawsuit lending? It's sometimes referred to as third-party litigation funding, and it's a service that gives plaintiffs cash now in exchange for a portion of their future settlement in a lawsuit. But these are not traditional loans like you would get from a bank or a credit union. These loans are called non-recourse loans because the plaintiff doesn't have to repay the loan if they lose their lawsuit. Now that might sound like a good thing, but because these loans are non-recourse, they can basically ignore some state laws when it comes to interest rate and oversight. So for example, New York State prohibits the charging of interest above 16%. Anything above that would be considered usury. Now there are exceptions to that, but that's generally the rule. Because these loans are non-recourse, they don't have to adhere to that 16%. They can charge higher interest rate than that, sometimes much higher. We're talking 40, 50, 60, sometimes 70%. So in many cases, the plaintiff will walk away after their case with little or nothing after the fees and legal costs. So why does PINY care about this practice? Well, these unregulated funders often push for inflated settlements, making lawsuits longer and more expensive. That directly impacts claim costs, and insurance carriers adjust their premiums to cover the difference. So you're seeing businesses and consumers paying more for premiums because of these lawsuit lending firms extending out court cases and just making them more expensive to settle. Given the detrimental impact that lawsuit lending can have on plaintiffs as well as insurance premiums, PIA is supporting legislation that would put some regulatory framework around the practice. Now, the legislation that PIA is supporting doesn't ban lawsuit funding. We realize that it does play an important role in allowing plaintiffs to seek their legal remedies, but it does bring some oversight to a shadowy financial practice. So legislation that PIA supports would put in reasonable fee caps, provide clear disclosures for plaintiffs, as well as a right to cancel contracts, and provide a mechanism for licensing and oversight of the funding companies. So all of this will protect vulnerable plaintiffs, reduce unnecessary litigation costs, and hopefully help stabilize insurance premiums across the state. PINY strongly supports this legislation that would put necessary guardrails around this practice. But the association can't do it alone. We need you. If you're interested in getting involved in this issue, I'd encourage you to get involved with PINY's District Office Visit Program. This is the program where we match up insurance agents with their local legislators for meetings so you can talk to them about the legislative priorities that are most important to you and your clients. Become a member of the Agents Advocacy Coalition. That is the official political action committee of PINY. And that group helps to support legislators who help support the insurance industry. And finally, watch PIA Northeast publications and social media for news about updates on legislation, as well as advocacy campaigns that you can get involved with.